Good morning, friends. My name is Avinash Agarwal, and I welcome you all to Ecoholics YouTube channel. Friends, in this video, I'll be discussing with you important current affairs from 9th May 2024. As I have established a pattern, we'll be discussing three important articles which have appeared in Mint newspaper. The three articles that I have selected today are related to India's household saving rate. Second article is related to the farm export policy that India adopts. And the third article is related to the trend in direct income tax collection, which is a direct tax. So what has been the trend like? So these are the three articles that I'll be covering, right? The new timing for this session is going to be from 7:30 a.m. from today onwards. So I understand that a lot of students may probably miss the live session, because if you all are tuning in at 8 a.m., then I would have already started this session. So I'm extremely sorry that you have missed out on the live session. Going ahead, please make a note that the timing for this session is going to be 7:30 a.m. right? So let us start with our discussion. Those who are present in the live session, you all can please confirm your presence. You can just kind of confirm whether you are able to hear me, if you are able to see me properly, etc. So that would be like super helpful for me, and then we can proceed ahead. I think that everything is fine from my end, but a confirmation from your end is always very helpful, right? So let us start. So we are talking about India's savings rate upfront, right? So let me just give you a brief idea. What do I mean by household savings, right? So households, they have a personal income. If you have read the NCRTs, especially the 12th standard NCRT, so then you know that there is a gigantic looking formula for personal income. I'm not going to go into that formula for personal income. Let's just keep it at a very layman's level, at a very understanding level right now. Typically, just imagine personal income. Just imagine your own house. Like for instance, let me just imagine my own house, right? So in my house, there could be multiple streams of income. Some of us could be having, let us say, a salary which is coming in on a monthly basis. Maybe somebody is an entrepreneur and therefore is generating some amount of profit, right? That is, adding to the household's personal income, right? Apart from that, maybe we may have some financial assets, so we may be getting some kind of interests, or maybe some kinds of dividends, or maybe some of these things may be coming in one way or the other, right? Maybe we have a property somewhere and we are having some kind of a rent coming in, right? So what I'm essentially trying to say is that when I add a variety of our sources of income, right, so we get something called as a personal income. Of course, we don't get to enjoy this entire personal income. We have to pay taxes on this personal income. Does that make sense? Right? So I see there are certain viewers. So if you all could just respond, it will be very helpful. Okay. So what I'm trying to say is that it's not as if that we get to enjoy the entire personal income. We have to pay taxes, right, to the government on this income. We may also have to pay certain fines, certain dues, etc. to the government, right? So from the personal income, you subtract your tax payments, right? You subtract your non-tax payments, right? And then what you arrive at is your personal disposable income. Okay. What is personal disposable income? Personal disposable income is income which you can either consume or you can save. You can do whatever with it. It is completely yours. You have complete command over it. You have complete authority over it. Now, out of this personal disposable income, let us say that you do some kind of consumer expenditure. Okay, so you subtract that consumer expenditure, and then there is an amount left. Okay, and that amount essentially, is very close to the idea of what is getting saved. Because if you imagine your own house, and if you're having, let us say, I don't know, combined personal income of your household, maybe let's say 10 lakh rupees. Let's say that you have paid 4 lakh rupees in the form of 3 lakh rupees in the form of tax and various non-tax payments. 7 lakh rupees is spending. Out of 7 lakh rupees, let us say you have spent 1 lakh rupees at least on your monthly household consumption expenditure, or let's just be very gracious and very large hearted, and let's assume 2 lakh rupees. right? So you still have 5 lakh rupees. So what happens with that 5 lakh rupees? That 5 lakh rupees is essentially what gets saved. Where does it get saved? You may park it in, let us say, a fixed deposit or a recurring deposit or some such instrument in a bank, right? You may park it in maybe mutual funds, maybe the stock market, maybe into equities, maybe into debentures, maybe into bonds, right? Or what you may alternatively choose to do is that maybe you can use this money to, let us say, buy some kind of a property, maybe a house, maybe a farmland, maybe an industrial property, or whatever the case, right? So those are your physical investments, right? So that's what the idea over here is, that the money that gets saved, the 5 lakh rupees that got saved in this particular case study that I just made in front of you, this 5 lakh rupees is very important for the economy. It is important for the banks because this is the source for banks deposits. It is important for the corporates because if corporates are issuing bonds or issuing shares because they want money so that they can do investments. So if you have this savings, then you can give that kind of, money to corporates when they are asking for it. Government issues bonds, they need money. So if you have savings, then you can invest in government bonds, right? There is a construction boom ongoing, right? So you can probably support the construction sector if you are in need of a house and if you buy a house. So that would create a plethora of jobs in the construction sector and that would be a massive boost to the Indian economy, right? So that is the importance of your savings. Is this part very clear to all of you, right? I'm starting at a very, very lay level and starting at a very, very commonsensical level, because if you understand something which is at a very, very commonsensical level, then everything else will automatically be fine. Now, with this base of understanding in place, let us move ahead, right? Now, obviously, like I just explained to you, that Indian savings or the savings which households do in India, right? So that is a key source of funds for the economy. And if this sum is declining or if these savings are declining, then we should be a little concerned. Let us say that a smaller pool of savings is available, right? That basically means that home budgets have been stretched. Home budgets have been stretched in the sense that maybe you may interpret it that, okay, our incomes are less, our expenses are what they are, and therefore the savings are less. That could be one interpretation. Because see, the idea, what is the headline saying? Lower financial savings is something that we are talking about. So why is it that your financial savings are lower? Why is it that your financial savings are lower? So we'll figure it out. By the end of this article, everything will be damn clear to you, right? So if, let us say, a smaller pool of money is available to you, that basically may mean that your incomes may be compressed or your expenses may be elevated. That is why maybe your savings are less, right? That's how it's supposed to be interpreted, right? So let's see whether that interpretation is right or wrong, right? Let me throw some data at you. There is this term, and just accept this term for 2 minutes. There is this term called net household savings, and somebody comes and tells you that this net household savings, it has fallen to a 5-year low of 14.2 trillion rupees. 1 trillion is like 1 lakh crore, right? So 14.2 trillion meaning 14.2 lakh crores, right? So it has fallen to a 5-year low of 14.2 lakh crores, and in 2021 it was 23.3 lakh crores. So there is a huge drop of 9 lakh crores. There is a huge drop of 9 lakh crore over or almost 40% drop in this brief period of 2 years, 2021. So 21-22, 22-23, right? So huge drop of almost 40%, right? Now household savings, they are very important. I've already established, right? Household savings are very important. They're making up half of India's gross savings. If these savings are dropping, that means that less resources for banks. If the banks don't have resources or if banks are not able to collect deposits, then they will not be able to give loans easily. If they are not able to give loans easily, then there will be very difficult. It will be very difficult to undertake investments easily. If investments can't happen, then we will not be able to increase our production capacity easily. If we are not able to increase our production capacity easily, we will not be able to increase production easily, and that basically means that our GDP growth will suffer, right? So this is the kind of chain that you have to be able to understand. Okay, so obviously overall savings of Indian homes are very, very important, right? So what happened? Where is the money going, right? So the point is that you have to kind of understand what's happening with home buying, right? See, please understand one thing. What is happening over here is that net household savings, right? Net household savings have dropped. And what do I mean by net over here? Net means net of loans. right? So the net household savings have dropped, right? And what has simultaneously happened is that household liabilities have rose steeply to 15.6 lakh crores from 7.4 lakh crores. So let us just hold on what's happening over here. So first thing that you need to understand is that if you look at household liabilities, what is it that households owe, right? So that number has gone up from 7.4 lakh crores to 15.6 lakh crore. So why is it that households have borrowed so much amount of money? What are they going to do with it? Are they going to eat it up? Are they going to spend it on weddings? Are they going to go to Maldives? What are they doing with this money? No, they are investing this money. But where are they investing this money? They are investing this money in buying houses, in buying property, right? So if you see the savings in physical assets, if you see the savings in physical assets, you are a household, you have 5 lakh rupees on a monthly basis to save. What will you do with that 5 lakh rupees? You will not put all of that 5 lakh rupees into Zerodha or into equity market, correct? You will not put that entire 5 lakh rupees into mutual funds, correct? You will not put that entire 5 lakh rupees into FDRD, right? You will probably do some physical assets building also, like I explained to you, land, property, etc. So savings in physical assets has grown by an impressive 13.4 lakh crore over that period to 34.8 lakh crore. So what households have done is that they have diverted their savings towards physical assets. Now again look at this article. It will make more sense. Lower financial savings aren't a cause of alarm, because savings can be financial savings or non-financial savings. Financial savings are one type of savings, but there are savings in the form of physical assets too. So buying a property is also a form of saving. Now read this again, that Indian savings are a key source of funds, right? Net household savings, they have fallen. What is the meaning of net? Net basically means that it is net of loans, right? Household savings are very important. They make up half of India's gross savings. Okay. What has happened is that there was a boom in credit offtake. After COVID pandemic settled down, there was a boom in credit offtake. And using that credit, what did you do? You purchased home, right? And this is very evident. If you look at the construction industry statistics and if you look at the bank books, you will be able to clearly see that banks have given a lot of loans. Which kind of loans? Home loans. Where have those home loans gone? In purchasing property, right? So the net figure over here dropped so low. Why? Because households have taken loans. So the number of loans, the quota of loans has increased from 7.4 to 15.6 trillion in 22-23. Savings in physical assets have gone up from 13 to 34. So households took approximately, let us say, 10 lakh crore worth of loans. From these numbers, it seems that households diverted 10 lakh crores worth of financial savings into physical savings. And that is why what you see over here is that in totality, there is a jump of 20 lakh crores in your savings in physical assets. I will repeat myself again. What was the alarm that was raised? The alarm that was raised was that there is a 9 lakh crore decline in your financial savings. Now let's make this number 9, 10 just for my ease of calculation, right? So let's say that 10 lakh crore is the drop in your savings, right? We are seeing that household liabilities have increased by another 10, 11 lakh crores. So make this also 10 lakh crores for my ease of calculation. So essentially 20 lakh crore needs to be accounted for. Now where is this 20 lakh crore getting reflected? This 20 lakh crore is getting reflected over here. That if you see the increase in savings in physical assets, you can see that there is an increase in 20 lakh crores sitting over here. As simple as that, right? So what is the story now? The story is that loans have been taken, properties have been acquired after the pandemic, right? So what have people done? Right? So they've taken on debt. Yes, some part of that debt may have been diverted towards consumption, but the bulk of that debt has gone into physical asset creation, right? So what has happened is that enlarged credit or loan taking from people or loan giving by banks was prudently, wisely, sincerely invested in physical assets, right? Now, if suddenly housing market crashes, if suddenly there is a drop in prices of houses, right? If that happens, that's a very bad thing. But otherwise, typically what happens is that property prices increase. So the investments that households have done are good investments. They are futuristic investments, right? Another thing which has been witnessed, and if this is clear so far, then please type yes, because I've explained some hardcore numbers to you. I've explained what is the meaning of personal income, personal disposable income, right? I've explained the meaning of tax payment, non-tax payment. I've explained to you what is the meaning of household savings. I've explained to you what is the importance of household savings. I've explained to you that household savings can be into financial assets or physical assets. I've explained to you that there has been a decline in financial assets. I've explained to you that households have taken on loan from banks, and I've explained to you that there is a substantial increase in savings in physical assets, and that reflects in the loan against property details which emerge out of our financial systems, right? So the conclusion is that a decline in financial savings isn't a cause of concern. That's not getting caused because maybe your incomes have crashed or anything like that. Your financial savings have declined because you have converted your financial savings, or you diverted your financial savings towards, let us say, physical asset building. That's the crux of this entire story. If this is very clear to you, then I want everybody to please type yes. Thank you so much, Rashmi, for responding. I want everybody who is listening to this lecture to also be able to respond. If you can do that, then that would be like really super nice on your part. Now moving ahead, in this article itself, another thing that has been witnessed about our households is that they have started investing in equity and paper assets quite a bit. So there has been an explosive growth in demat account opening. There has been an explosive growth in mutual fund investments. So if you see mutual fund investments done in India, so they were around 64,000 crore in 2021. Now in 22-23, that was at 1.79 lakh crores, right? So this is three times jump almost, right? If you see the amount of money that has been invested in debentures, so we were putting in 1 lakh crores earlier, now we are putting in 2 lakh crores nearly, right? So you can see over here that if you see direct shares bought, mutual funds, debentures, right? So they are also part of your financial savings. All these shares, debentures, mutual funds, they are a part of your financial savings, right? So households, like, you know, in probably, like, for instance, a lot of my father or mother's savings, they were quietly parked in FDs and RDs and such kind of instruments. So what is this second part of the article trying to say? Second part of the article is trying to say that even within your financial savings, there is a turn towards equity and other paper assets, non-traditional financial savings, so to speak, right? So this is something which is happening, right? So what's happening over here? Why is this happening? So maybe the risk appetite has grown. Maybe households want to, you know, diversify their savings portfolio so that they can generate a higher return on investments rather than just settle down for a 7-8% or something like that. And more savings mobilized by capital markets, that is always good for the economy, because capital markets is going to basically put that money into the hands of investors who will then invest that money. So risk aversion coming down, that's a good thing, but you have to be very vigilant, because this is only last 2 years ka data. And if you see Nifty's performance or Sensex's performance in the last 2 years, it has been a bull run, right? So a lot of these new investors or first time investors have never seen a bear market. They have never seen a crash. Okay. They have never seen a period where, you know, you have to sit with negative returns for 2 to 3 years, 3 to 4 years and wait it out, right? So markets, they have to be very vigilant. Regulators have to be very vigilant, and people who have invested in these markets, they need to be having the right mindset, which will only develop with a period of time. But that's the basic idea that is being presented in this article. So I hope that you have enjoyed this article, right? This note will be made available on our app, Ecoholics app, which you can download. You can do a free registration. You can go into the study material section, and from there you will be able to get the current affairs PDF. It is my bad that I have not shared the last 4 classes ka PDFs, which I have done last night. So I'll make sure that I share on a regular basis, and my backend team is like superb. So whenever I share, they immediately will share it with you. So I'll make sure that there is no backlog from my end. I'm very sorry about that, right? So now let us move ahead to the next article. Now we will speak about the fallout of India's unpredictable farm trade policy, right? So we are talking about exports and imports of basically agricultural products, right? So now this is again a very important article, because this is a systemic problem that Indian agriculture or Indian farmers have been facing, not just from last 5-10 years, but from the last 20 to 30 years at least. This problem has been persisting. Now what is the problem? Let me explain the problem to you, and then we will go through the article, right? Now it's all about domestic prices. The game is about domestic prices. Now just imagine that domestic prices of onion go up. Okay, so what will the government's first response be? typically, among other things, what government will do is that it will ban exports. Why will it ban exports? It will ban exports so that the local availability of onion increases. So what happened? Domestic prices of onion went up. So what did the government do? It banned export. Why? So that local availability of onion goes up. You know that it's all about demand supply at the end of the day. So essentially what you have ensured is that supply goes up. So demand was greater than supply, as a result of which domestic prices were going up. Now what you have done is that you have pushed the supply upwards. Now since you have pushed the supply upwards, so you will probably arrive at this situation and domestic prices will cool down. So who is the winner in this situation? Consumer is the winner. Why consumer is the winner? Because these domestic prices which had gone up, they will cool down. Who is the loser in this situation? Farmer is a loser in this situation. How is it that farmer became a loser in this situation? So farmer was exporting and was making a decent amount of revenue, decent amount of profit. You took that opportunity away from him or her, right? And you forced them to sell in the domestic market at a lower price. So the additional revenue or the additional profit that they could have made in this situation, they are not going to get this profit, right? So that is the problem of, that is one of the problems, that's one side of the coin. That is one of the problem of our agricultural trade policy or farm trade policy. That moment your domestic prices spike up, right? What you do is that you ban exports to increase local availability, to rebalance the demand supply situation. And once demand supply situation is rebalanced, prices get corrected. By that time, farmers have lost opportunity to increase their profit, to increase their incomes. This is the basic crux that we are going to talk about. This is one side of the coin. There is another side of the coin that I will talk about. So let us start reading this article and see what this article says. Now, you know that Maharashtra is voting, right? And this is like, you know, a mixture of politics and economics. I don't want to comment upon whether it is right or wrong, right? But you can make your own judgments the way you want to make them. So onion growers, they are obviously unhappy because the government took away their opportunity to earn by exporting. So onion, there was anger, or there was you know, a feeling of animosity towards the government a little bit, if I may say, right, amongst these onion growers, right? So to placate these onion growers, to make them happy, what the center has very strategically done is that they have lifted the ban on exports which was imposed last year, right? Now, why is it? So what happened? So in December 2023, exports of onion were banned, right? Because there was a decline in production and retail prices could have gone up, right? So government was afraid that if retail prices go up, then that will not be good because election is coming and there was a decline in production, right? So they feared that the demand would become greater than supply. They feared that this would cause the prices to go up. Therefore, what did they do? They banned exports. Like I explained to you, they banned exports. Okay. So farmers started protesting. They demanded a rollback, etc. Government did not accept farmers' demand, right? So ban, like I said to you, that it causes the local prices to cool down, but it hurts farms' revenues. Now, 5 months later, on 4th May, the ban has been lifted. Now, farmers can export. The condition is that minimum export price plus a 40% duty, right? You can export, but you can export only above certain price threshold. So, if you are able to get this price in the international market, go ahead and earn. We will not stop you, right? So, farmers have been allowed to export, but an export duty of 40% has been charged on the minimum export price. So, there is a high threshold which has been kept. That if you get a price in the international market higher than a particular price, then you can export, right? Now, why is it that center has become so generous towards farmers? So the center believes that supplies have improved, therefore there is no threat right now, so therefore farmers can be allowed to export. Okay, there are people who believe that the timing is suspect. There is an ongoing general election happening in Maharashtra. Maharashtra is the biggest onion growing state in the country, right? And just before the election, farmers were placated with this kind of a sop, with this kind of a step, right? Now, can this decision be reversed? That depends upon how local prices behave. If local prices jump up, government may get afraid again and they may ban exports again, right? So these are all knee-jerk reactions. These are all whimsical policies. You don't know where they will turn. Okay. So retail prices, retail onion prices, they were 56% higher recently, year-on-year basis. wholesale prices were 62% higher year on year basis, right? So onions can be exported at price above 64 per kg, right? So this minimum export duty plus export tax that you have charged, 40% export tax that you have charged. So this basically translate into a price of 64 rupees per kg. That let us say that if you're getting a price of 64 rupees per kg in Bangladesh, or you're getting a 64 rupees per kg price in Iran, then you can export your onions to these countries, right? So the domestic retail price right now is around 31 rupees per kg. Okay, so if these domestic prices shoot up, right, maybe because of export supply in domestic market reduces, etc., or maybe because there are some losses in the kharif season a couple of months down the line, so this decision to allow exports may get reversed. Government may get afraid again, and they may say that okay, we will not allow the exports of onion to happen, right? Now, are these export restrictions common? Unfortunately, yes, right? Whenever local prices of anything goes up, government is first step it takes is that it bans exports. We have seen this happen in wheat, we have seen this happen in rice, we have seen this happen in sugar, we have seen this happen every year in one commodity or the other, right? So this is deeply problematic for farmers. Another thing that is problematic for farmers is that center allows completely duty-free imports of pulses and edible oils. You have to remember that in India, pulses and edible oils are items of mass consumption. Every household consumes these items on a daily basis, right? And India produces a lot of pulses, India produces some edible oils, but our consumption demand for pulses is so high that our production is not sufficient. So India is the largest producer of pulses, but still the demand for pulses is so high that we have to import a lot. India produces some edible oils, but the demand for edible oils is so high that we have to import a lot. So the domestic availability is not there. Farmers are not able to supply, right? So farmers should be encouraged to supply. They should be supplied with seeds of these items. They should be offered minimum support price for these items. They should be offered support to grow these items. So it is not as if that it is impossible to grow these items in the country, but we don't have the policy mindset that is required to be able to successfully increase the production of these items to a level where we are not import dependent. So now we are import dependent. So what does government do? It makes these imports duty free. Now if you are making these imports duty free, you are again hurting the farmer. Now let's say that you make these imported items costlier, so there will automatically be an incentive to produce domestically. Correct? That is how incentives work. What did we do when we wanted to promote industries in India? We increased our import duty on a lot of manufactured items ka imports. Why? So that domestic industries is protected, so that domestic industries get an incentive to produce those items. As simple as that. Why can't we follow a similar policy for Indian farmers for 5 to 7 years, right? Why can't we do that? That is a question that needs to be asked, but I'll just leave it at that. So there is a strong consumer bias where what the government essentially wants to do, and you cannot really fault the government over here, because what the government will then come out and say is that, boss, see, food is very important for those who are at the bottom of the pyramid section of population. If you look at their household budget on a monthly basis, they are spending a huge amount of it on food. So if food prices go up, then that means that they are spending even more on food. That means that even less is available for their other requirements, which is unfair to them, which is unfair to other industries, and so on and so forth. So argument will always be right from one perspective. So there is this pro-consumer bias that is there, right? And now farmers are also not doodh ka dhula. You have to remember, now this is the second side of the coin, right? Farmers want unrestricted trade when global prices are very high or high. So let's say that global prices are high, farmers will say that we want to export, we want to export and earn, right? But when world prices are low, then farmers say that no, you should not allow traders to import items from abroad. Huh? You should buy only from us. You should not allow importers to import cheap items from abroad, right? That will cause a loss to us. You should buy only from us. So even farmers are, trying to protect only their interest. Consumers are trying to protect only their interest. Farmers are trying to protect only their interest. And the government is stuck between a rock and a hard place, that it needs to balance the interests of both these parties. That is what the problem is, right? Now, how do such policies reflect on us? Obviously, these policies reflect badly on us. Like for example, suddenly you banned the exports of rice, right? The entire world criticized you. Why? Because India was having 40% share of the global trade. People were used to buying from India or consuming Indian rice. Now suddenly you say that we will not export. Go look for a rice somewhere else. So those countries, those traders, those buyers will always remember that you are very finicky. You are not dependable. Your policies can change with the drop of a hat. Similarly, Bangladesh was used to buying onions from India. Suddenly you said that we will not export to Bangladesh. We don't care. So Bangladesh was running helter-skelter trying to find onions here and there. Right? Again, so they are not going to trust us. So boss, if you really want farm exports to increase on a year-on-year basis, because I remember some targets were set some years ago. I have forgotten what the target was, but I remember vaguely some $100 billion ka target was set that we want to achieve $100 billion of agricultural exports, which can be done. It's not impossible, but it cannot be done with this kind of an approach. You can see in front of you how the graph is behaving. Farm exports were increasing steadily from 1920 to 2021 to 21-22 to 22-23. They were steadily increasing, but then you suddenly slammed brakes. Why? Elections were coming. You are afraid that domestic prices going out of hand will become a weapon in the hands of opposition, will become a talking point amongst the masses, and we could probably lose votes. Good politics, bad economics. UPSC has asked tremendous number of essays on this topic. You can search it up on Google. Good politics, bad economics. Right? Search it up. Moving ahead, let us talk about income tax. So are you all there with me? Right? Everybody who is there with me, can you please just type yes if you all are understanding? Maybe a good morning. I would just like to connect with you. Like I have always mentioned that, you know, knowing your names, knowing what you are coming, where you are coming from, which state you belong to, which city you belong to, that's always very important for me. So if you are in Mumbai, you want to meet me up, call me up, you can always do that. If I am in your state, I would really like to meet you and stuff like that. Right? Personal income tax, right, does the heavy lifting in direct tax. Now, what are direct taxes? Right? So your income tax, right, your corporate tax, in India's case, your securities transaction tax, right, a wealth tax, inheritance tax, if they are ever, you know, coming into picture again. These are all direct taxes. What do I mean by direct taxes? That if, let us say, an income tax has been imposed on me by the government, right, then I will have to pay income tax out of my pocket. I can shift it into your pocket. Are you getting my point? So because I have earned an income, hence I will pay an income tax. And what is an indirect tax, therefore? So indirect tax may be charged, you know, or it may be, you know, the shopkeeper may be paying the indirect tax, but the actual burden of that indirect tax is being borne by the consumer, because shopkeeper is just adding plus 18% in the bill and transferring that burden to the consumer. So the burden of indirect tax can be transferred. The burden of direct tax cannot be transferred. Direct taxes are considered very important sources of revenue. They're progressive, because if I am rich, I am having a high income, a high profit, and if then a direct tax is being charged on me, then that is fine, because I can afford to pay. And why I should pay? I should pay because, boss, I have generated an income or I've generated a profit using society's resources. Right? What are society's resources that I have used? Land, labor, healthy labor, educated labor, law and order, justice, orderly situation, good demand in the market, etc., etc. So this good society, this good ecosystem does not come free of cost. It needs to be created, and government creates it by spending money on it. So where is the government going to get money from? Taxes. So if you are paying taxes, you are not doing any charity to the government. You are earning an income, you are earning a profit. That is because government, society, economy, civilization helped you be what you are, right? So you have to give back so that others also have the opportunities that you had. That is the basic idea of why taxes are important. ठीक है? अभी ज्ञान हो गया. Now let us talk about direct taxes. Now you see the behavior of the share direct taxes, corporate tax and personal income tax over here. So the red line is your corporate tax, the blue line is your personal tax. So you see that personal tax is going up, right? And you see that the corporate tax is going down. What is happening over here? So we are talking essentially about the share of these taxes in total direct taxes, right? So if you imagine 100 rupees direct tax collected, right? So approximately 53 rupees now is coming from income tax, and approximately 47 rupees is now coming from corporate tax. So earlier they used to be closer to each other. They used to be broadly neck and neck, right? They used to be closer to each other. Now there is a wide gulf. Now there is a wide gulf between your corporate tax and income tax. Okay. If you see corporate tax as a percentage of our nominal GDP, right? And if you see personal tax as a percentage of our nominal GDP, so you again see that they used to be very close to each other. Now again there is a gap over here. So what are the factors that explain to you the increase in income tax collection, or what explains this to you, right? So that is what you need to understand over here. So for what has happened is, very quickly, that second year in a row, individual taxpayers, they have contributed a greater amount of revenue than, let us say, your corporate income tax, right? So your a personal income tax collection, they have accounted for 53%. Corporate income tax collections have accounted for around 47%. Similar breakup can be seen, or similar trend can be seen in US, Canada and UK as well. In these countries, typically your income tax is a greater contributor to government revenue than a corporate tax is, right? If you ask people in CBDT, that is Central Board for Direct Taxes, and if you ask them for an explanation that why is it that personal income tax collections have increased, so they have given you a number of reasons. They say that rising income levels mean that a lot more people are now eligible to pay taxes, higher use of technology by the government, so government is able to mop up revenue more efficiently. It is very difficult to steal from the government now, even a small penny, right? Taxing dividends in the hands of individual taxpayers. Like for example, if I am a shareholder of Reliance Industries Limited, right? So earlier Reliance used to deduct taxes and then give me dividend, right? Now they are giving me dividend and I am paying taxes out of that dividend, right? So the tax that now I am paying is getting reflected in my income tax. So earlier the dividend used to come net of taxes. Now the dividend is coming and I am paying the taxes. So the tax that I am paying is reflecting in my higher income tax that I am paying. Okay. So taxing dividends in the hands of individual taxpayers, simplification of the Income Tax Act by reducing exemptions and deductions, we're making it easier for people to comply. So people are willing to comply, right? So if it is easier for you to pay an X amount of money, then you will probably just pay it and forget about it. You will not try to steal it. You will not try to get around with it, etc., etc. And there has also been a reduction in the tax rates. So people are willing to comply. So there are some steps which are increasing your compliance, such as technology, such as simplification, such as reduction. And there are certain reasons where your income has increased, therefore your taxation has increased, such as rising income level and taxing dividends in your hands. Okay. So these are the reasons that CBDT is putting into place. Okay. Apart from that, there is this side note that I want to make, that government had created basically a new tax regime, a new income tax regime, right, in 2020. So if you migrate to this new income tax regime once, then you cannot come back to old tax regime again, right? Now in India, a lot of people have preferred to remain in the old income tax regime because it is more easier to understand, easier to follow, and it is advantageous for me as an individual. My tax liabilities come out to be lower eventually in that older tax regime. So not a lot of people have come into this new tax regime, right? So to attract people into this new tax regime, the government said that up to 7 lakh rupees income, essentially we are not going to take any tax from you. So in the old tax regime, that limit is 5 lakh rupees, I think, and in the new tax regime, that limit is 7 lakh rupees, right? That up to 7 lakh income, we are not going to take any tax from you. So why is it that government is giving you this incentive? Because it wants to attract you into this new tax regime, right? So be very careful. Right? So apart from that, if you see in absolute terms, right, so income tax collections, they are standing at around 10.5 lakh crores, right? And there was a growth of around 25%. If you see corporate tax, it is standing at around 9 lakh crores and there was a growth of approximately 10%. So they have grown faster and their absolute number is bigger, personal income tax. If you see indirect tax collections, right, so they are around 15 lakh crores and they grew at around 7%, right? So again, why is it that why is it that corporate income tax is lower than personal income tax? So there are few more reasons that you need to take in mind. Corporate tax rates were reduced, so because of that rationalized, corporate income tax collection has gone down, right? I have already spoken about this dividend distribution tax, that this DDT has been shifted in the hands of the individual who is getting the dividend. So earlier the company was deducting the dividend and then transferring dividends to everybody. That was unfair, because if I am a poor shareholder of Reliance who should not ideally pay any tax to government, and you are a rich shareholder of Reliance who should ideally pay a lot of taxes to the government, so why is it that Reliance has deducted DDT and given my dividend to me, right? Because I should not pay any taxes. So that is why the government corrected this problem. They said that transfer the dividend, and if then Avinash is a poor shareholder, he will not pay any taxes. But if you are a rich shareholder, then you will pay a tax over here. That's the broad idea that you need to keep in mind. So dividend distribution tax has been transferred in the hands of the individual who is getting the dividend. Equity markets are buoyant. We discussed in the earlier article that Indians have started doing a lot of equity markets trading and so on. And with every equity market ka trade, there is a securities transaction tax that we need to pay. And this securities transaction tax is a direct tax, right? And it gets reflected in your personal income tax, right? It gets reflected in your personal income tax. So since STT collection is going up, therefore personal income tax collection is also going up. These are not all of these factors can be given 100% credit. So every factor is contributing a little bit. So corporate tax cut rate is pulling corporate tax down. DDT is pushing income tax up a little bit, right? Securities transaction tax is pushing up income tax a little bit. Technology driven oversight of transaction is pushing up income tax a little bit, right? Now if you go and try to file your income tax returns, so you will get a pre-filled income tax return ka form, right? So you don't have to put in a lot of details yourself. Details are being auto captured and a lot of these fields are getting auto populated. So filing an income tax return has become now become easier. Don't say that I have said this to you, because my wife is a chartered accountant. She'll kill me if I say filing income tax return has become easier. Then she'll make me file my income tax on my own. Please don't do that, right? E-verification of transactions is happening, right? So no transaction is missing, right? And facility for updating tax returns, in the sense that if you have, let us say, made a bona fide mistake or a genuine mistake and you want to rectify that mistake, then that facility has been made available to you that you can update your tax returns, right? So these are some of the factors which are helping your income tax to grow faster than corporate tax. Another factor is introduction of GST. Now, because of introduction of GST, there was a push towards formalization of the economy. So a lot of firms, they took the GST number, etc., right? So they came under government's tax net. So their employees also came under the government's tax net, blah, 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 right? So that has also helped us to a certain extent. If you look at OECD countries or advanced countries, typically or Western countries, so over there, personal income tax and social security contribution, they make up major chunk of government's tax revenue over there, and corporate tax collects only about 10%. But that is over there, right? We are a different country, they are a different country. Why not compare ourselves with China? Maybe we'll have a different picture. So we will not get into this comparison a lot, right? Another factor that can explain why income tax is growing so heavily in India is that if you see the tax rate in the highest slab of income, so government is collecting a substantial amount of tax from super rich, right? So because of that, because of the high rate of surcharge, because of the high rate of tax in the individual slab, also you are seeing a contribution coming in from there, right? Apart from that, technology has been a boon. So what is it about technology? So what is now happening is that there are a lot of third-party reporting entities, banks, mutual funds, right, insurance companies. So all your investments over there are getting tracked. All your transactions are getting tracked. So from a lot of these third-party reporting entities, a lot of data is getting captured, and that data is being made available to you as an annual information statement. So if you log in to pay your income tax, so you will see that, government is not asking you, beta, what was your income? Beta, what did you do with your income? Government is telling you, ki, beta, this was your income, this is what you did, this is what you did, this is what you did. The behavior then changes. So if I have to report myself, I'll probably underreport. But if the government is reporting to me, ki, beta, you are doing this, we know it, then the probability that you would tick mark, say yes, that I've actually generated this amount of income and I should pay this much amount of tax, your behavior becomes compliant, because you know that you cannot hide, right? So that is very, very important. So this pre-filling of tax return forms from data captured in the AIS as well as 26 AS statement. What is 26 AS? Very important for me, right? So it reflects my TDS, tax deducted at source. That if I have worked for Ecoholics and they have paid me money, so they will deduct TDS and pay. So government knows that I am working for Ecoholics, can't be hidden from anyone, right? So expansion of TDS, expansion for TCS, all these provisions, right? Apart from that, you know, if you are, let us say, into virtual digital assets such as Bitcoin, right? If you are into gaming and stuff, Dream 11. So if you are winning out of that, uske andar se bhi TDS will be deducted. So government is knowing what you are doing in your free time pass, right? So all these steps taken together. So CBDT considers that easing the compliance requirement, linking the information with other agencies, right? building trust with taxpayers. All of these things together have helped in improving our income tax collection. So again, massive articles discussed, my friends, right? I hope that you have enjoyed this session, right? And Pooja, you had a question that what are OECD countries, right? So typically your OECD countries are basically your, what is the full form of OECD, right? So that is Organization for Economic Cooperation and Development. This is what OECD is, right? So it's basically a group of 38 member countries, OECD countries, okay? And these OECD member countries are some of your most developed, most advanced countries. So entire European Union is a part of OECD. Australia, Canada, surely they are a part of OECD. Japan, South Korea over here, Australia, New Zealand over there, they are a part of OECD. So as a कुल मिला के there are 38 members. It was founded in 1961, right? They cooperate with each other, they coordinate their policies with each other, they establish the global trading rules, they have an important role in establishing all the global frameworks of governance, etc., etc. So that is what OECD typically does. So I hope that answers your question, right? So guys, I hope that this is very clear. So do like and share our videos, subscribe to our channel if you're liking our content, download our apps. And like I have said that I'm waiting for the day when you will call me and you will ask me your doubts personally, which is always doable via the Ecoholics channel. So thank you so much, all the very best, and we'll meet again tomorrow at 7:30 a.m. in the morning. Thank you, take care, bye bye, and Jai Hind to all of you guys.